Hello. So let me explain something very clear to you as to why is the market up. Over the past week, the market is up about 4%. The monthly, we're up 1.95%. When I'm talking about the market, I'm talking about the S&P 500. So the S&P 500 is up 3.93%. And on a monthly basis, 1.95%. That's great, right? But hold on. There's a story that's going on with the Fed. So what is going on with the Fed? Well, what's happening again in my previous videos told you that each time there's a problem, the Fed comes in and pumps money in the system. Lots of money in the system, it's got to go somewhere. Guess what? Eventually it pumps up assets and it creates fake valuation. Case in point, during the month of March, the Fed added $324 billion. Why do I care? Well, you need to understand that this money needs to find a home at some point. So what the Fed does, it keeps increasing balances. In addition to that, keep in mind, Fed is like a big bank as well, and SVB had losses, right? And it caused them to file for bankruptcy. But right now, the losses at the Fed are up to $44 billion on the loss based on the valuation of those financial instrument that they have. Even if you don't understand anything about the Fed and all that, and you don't care, what you need to know is they're pumping money in the system and they themselves have losses. What I'm talking about, if you look at a chart that shows you how much money they have pumped in the system, you're going to see that there's a huge bubble of $324 billion in the recent month. Why are they doing that? Well, what is driving this increase? Why it's happening? It's happening because they are increasing two primary main components. The first one is primary credit. So they're increasing the lending program available to depository institutions that are in general sound financial condition. That is something that they usually do. That's $88 billion. And then they are adding an additional $180 billion, which is the value of loans by the Federal Reserve that are not categorized elsewhere. So that's an additional $100 billion that they're adding. Why? Well, they're saying that we're not pumping in the system to quantitative easing because they're not buying treasuries, right? So it means that they're fueling the system with more cash. And they're doing it to sustain those bad banks. And what's causing the turmoil? Well, as I said before, it's the bond market. The spike in interest rates is a massive deviation from history, and that's causing cracks in the cheap, easy money. The Fed has about $44 billion in losses. So what's really going on? Well, basically, they keep fueling money into the system. They're talking tough. They're saying, we're not going to do this, we're not going to do that. But yet, at the end of the day, they just open the spigot because they do not want the pain. Unfortunately, most people don't see this, right? Most people see the stock market go up at SVB. They see the market going back up. So we should be cool. No, we're not. The Fed is creating a huge bubble here. Who will fill this gap, right? Well, that's the biggest question. Where are we going to get the money, basically? Well, I guess foreign buyers, but foreign buyers are tired of funding our deficit. They're not interested at all. So if they stop doing it, rates are going to go even higher. And obviously, keep an eye on gold and silver. Why? Well, because at some point you keep printing something that's worthless, people are going to go to gold and silver. So be careful, people, in terms of investing in money in the stock market right now. Take it easy. Do it very, very very slowly. Bubble is about to burst. Most of you are not aware of what's really going on because you don't understand it. It's not your fault. I mean, I do this as a living, and I could see the signs that are there, right? So my recommendation to you is, buy some dividend stocks. At least the price might be going up and down or whatever. That's okay as long as you get paid. Correct, right? Make sure the stock is a good stock, as I've already indicated in the past. So take a look at those stocks, those dividend stocks, those strong stocks. I don't think they're going to cut the dividends, but at least you're making money, because you cannot not be in the stock market. You got to be involved. But watch the Fed. It's a gigantic mess, and they're going to have to do something.